Restaurant app Toast insiders are selling stock. Over the last few weeks, Toast has been making major changes to its business strategy, and investors are concerned that the company will now be more focused on creating more funding rather than building a profitable business. Luckily for you, Fortune Fastlane, you've come to the right YouTube channel. Here, we will discuss restaurant app Toast insiders are selling stock. Let's dive headfirst into that matter. Investors' curiosity may have been aroused by the fact that numerous Toast Incorporated insiders sold a sizable portion of the firm over the previous year. When analyzing insider transactions, it is typically more useful to know insiders are buying or selling because insider selling might have a variety of causes. However, if numerous insiders are selling stock during a specified time period, shareholders should investigate further. We believe it would be unwise for shareholders to completely disregard insider transactions, even though we don't believe shareholders should merely follow insider transactions. Total insider transactions over the past 12 months. The largest single insider sale in the previous year occurred when Stephen Papa sold shares valued at $51 million at a price of $14.23 per share. Therefore, even at the present price of $17.47, it is obvious that an insider wants to take some money off the table. When an insider sells at a discount to the market price, it shows that they thought the lower price was reasonable. We are left to question what they think of the most recent valuation in light of this. Insider selling is not a good omen, but we can't be certain that it indicates that insiders believe the shares are properly valued. Therefore, it's simply a marginally bad sign. Just 25% of Stephen Papa's interest was sold in this one transaction. Over the past year, insiders sold more Toast shares than they bought. It displays insider transactions over the previous year for both businesses and people, the share price, individual, and date of each transaction. Toast insiders recently sold stock. We have observed significant insider selling at Toast over the past 3 months. During that time, insiders sold shares worth a total of $45 million, but we didn't register any acquisitions at all. This may imply that some insiders don't believe the shares to be inexpensive. Ownership by insiders of Toast. Examining how many shares a leader of a firm owns is another approach to gauge how closely they are aligned with other shareholders. Leadership in a corporation is frequently more aware of shareholder interest when insider ownership is high. 25% of Toast is owned by insiders, and at the current share price, that amount is worth around $2.3 billion. This kind of insider ownership is often welcomed by shareholders since it indicates that management motivations are in line with those of other shareholders. What does this information indicate about Toast insiders then? While they haven't been buying, insiders recently dumped stock. We also didn't have trust after conducting a longer-term review of insider transactions. Having a large insider ownership is positive, but the insider selling makes us wary. As a result, while it is useful to be aware of the buying and selling activity of insiders, it is also useful to be aware of the dangers that a specific firm is exposed to. Take Toast as an example. There are 3 red flags there that we believe you should be aware of. Record numbers of new users are signing up, and existing users are utilizing more Toast products than ever before. New customers are signing up in record amounts, and old customers are using more Toast products than ever before. What happened? Following an encouraging financial report for the second quarter, Toast, a provider of restaurant software, saw a spike in its share price on Friday. Wall Street was upbeat as revenue increased significantly and losses slightly decreased. As of 10:20 ET, Toast stock had increased by 14%. Toast exceeded its high-end projection of $665 million in the second quarter, with revenue of $675 million, a 58% year-over-year increase. In comparison to a quarter ago, the addition of about 6,000 additional restaurant locations was what drove this top-line gain. In addition, 61% of customers use 4 or more Toast add-on products, up from 55% from a year ago and 60% from the previous quarter. Toast's operating deficit increased to $99 million in the second quarter from $51 million in the same quarter last year. However, despite the fact that the loss from operations was over 2 times as large year over year, the $99 million loss was only marginally worse than the $101 million loss from the prior quarter. In order to better prepare for the future, Toast increased its guidelines. The management forecast revenue of $700 million to $730 million for the third quarter, which, at the midpoint of the forecast, would represent a 47% rise over the same period last year. In addition, compared to earlier guidance of $2.50 billion to $2.55 billion, it now anticipates total annual sales of $2.62 billion to $2.66 billion. More importantly, Toast doesn't anticipate significant losses like it did in the past. Adjusted profits before interest, taxes, depreciation, and amortization were projected by management to be negative by $175 million to $195 million. EBITDA is now anticipated to be negative by $140 million to $160 million. There's no way to sugarcoat the fact that these losses are still significant in absolute terms. Despite this, investors seem encouraged by the relative improvement. Wall Street took notice of Toast's second quarter beat and raise. For instance, The Fly reports that Needham analyst Mayank Tandon increased his price target for Toast stock from $21 per share to $27 in light of the platform's robust and continuous adoption. Although I'll refrain from giving a price target, I will concede that Toast shareholders can find hope in the company's adoption in the second quarter. The annual recurring income was up 59% year over year to $787 million as a final takeaway, growing quicker than total revenue, indicating Toast is becoming more sticky over time. Should you make a $1,000 investment in Toast Incorporated today? I want you to hear this before you think about Toast Incorporated. The top 10 stocks in their opinion for investors to buy right now have just been revealed by our award-winning expert team, and Toast Incorporated wasn't one of them. That's it for this video, Fortune Fastliner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!